Ultimate Traders here. Nathan from Queens. Saturday, November 19th, 2022. I'm going to hit you up with 3 videos again. I don't want to come out with a video like this. It's not something that I normally want to do because, I can discuss my trading strategies, but I don't want to stop someone from wanting to gamble or from wanting to bet, or if they feel like they should buy a growth stock or they want to buy a value stock, because we all are after different things. We had different goals. Now, if you recall back in April, over a year and a half ago, when I came onto YouTube, because I came on Reddit January 26th, I was doing trades for about 60 calendar days, maybe 45 trading days. Then I came on YouTube in April to discuss, the first couple of months on Reddit. I came out with a video that a real trader, even a very good trader, I'm not even saying okay, a very, very good experienced trader is going to make 25% of capital per year. An excellent trader, and this is excellent, like close to the best trader, can expect to make 50% of capital. Now, when I say these numbers, 25%, 50%, this is year over year over a long period of time. Yes, it's possible for a trader to make 500% in a single year, 1,000% in a single year. And I'm going to go over things. I don't want to try to cause FOMO, but I'm trying to discuss why I trade the way I do. I've been trading since 1994, since I turned 14. I've been through a crash, the only real crash when the NASDAQ fell almost 80, 82, 83% in the year 2000. And I got pretty much wiped out. I lost 75% in 2000. I think around April or May. And I just sold everything, got out, took about 3 to 5 months, didn't make a trade again. I studied, the atmosphere, the environment. I studied back a few months to see if there were alerts, whatever the case is. So when I came out with that video last April, when I'm trying to tell people that a great trader, not even okay, a great trader does 25% a year. An excellent trader does 50% a year. The S&P, since inception, has done 8% a year. Okay? The NASDAQ 100 QQQ has done close to 13 to 14% since inception. So if you can beat the S&P and you can beat the NASDAQ 100 over a period of time, that's excellent. So it makes me the trader that I am today. Now, I don't want it to stop you from doing the trades that you want to do, but that's the reason I trade the way I want to trade. If you look at this here, because when I try to tell people how to make money carefully, safely, like to me, that's the most important thing. And I'm telling them, to make like 10% on a trade or 20% on a trade, I'm not going to say everybody, but the majority of people don't want 10 or 20%. I mean, I was on Wall Street Bets posting screenshots at least several times in the last one or 2 months with trades, showing trades where I make 20, 25%, and no one likes it. I'm not here for follows, here for likes. I'm trying to give people ideas. But just so you know, if you took $10,000 and you were excellent trader, you made 50%, after 1 year, that's 15,000. Then you do it again, 50%. Okay, then you're going to have 22,500. And then you do 50% again, that's 33,000. Then 50% again, that's 50,000 with just 10,000 in 3 to 4 years. 10,000 to 50,000, making 50%. That's what I want to do. I know. Now, some of you, many of you don't want that. Either don't want that, 10 to 50,000 in 3 to 4 years. Some of you don't want that. Remember, 10 to 15, year 1. 15 to 22, year 2. 22 to 33, year 3. All right, and then 16. Yeah, year 4 years, 50,000 with 10,000. Now, a lot of you people don't want that or don't understand the math. That's why I did the math for you. So if you take 10,000 and you invest in the right ideas, and you get 25 to 50% over 5 years of time, even with the 10,000, you're gonna be up big, up big. Now, I don't want any of you to catch a whole bunch of FOMO, so I'm gonna go over a couple of things over here. Okay, I don't normally make what I made in 2020. I made close to 300% in the year 2020 and 110% 2021. Right now, 2022, I'm up about 30%. Normally, I make 50%. That's why I was saying 50%. Sometimes you make a little less, but normally I make about 50%, close to 50%, give or take 50%. The last time I made any type of gains like it did in 2020 was the 90s. In the 90s, I was doing like 300%, a lot, 500%. But in the 90s, I was taking a lot of risk. I was a scalper, throwing grenades, speculating all the time. And when everything crashed, I stopped speculating. What a lot of people don't understand is in 2020, even though I made 300%, I didn't gamble. I didn't take big risks. I was doing on a ton of banks. Capital One, People's Bank, NYCB, Capital. I already said Capital One, American Express, Goldman Sachs. I was doing on safer plays, but they were battered and crushed so hard that when they dropped so low, and the most money is made when things drop. No one's going to time the perfect bottom, but when things drop and when data comes out better, so you're buying it near the bottom, maybe not the perfect bottom, but near the bottom, and you're rallying with it. You're rallying with it. So first I was buying the banks, and then I started buying other companies that had very good financials. But normally in a real big mess, when things drop, I try to buy banks or high paying dividend stocks that pay me at least 5 to 10%. So while I hold, I'm getting paid, just like with Zim. But we're not going to go into that with Zim. But you want to buy stuff like that. So if something falls, something craters, you're getting paid. And the banks were the way to go in 2020. Now, a lot of people also don't understand the reason why everything was going through the roof. You know, we had very, very low rates. The Fed stepped in and said we're going to have 0.25 because of COVID. Stimulus was flying everywhere. And I hate to say this, but because of Sam Fraud, I can kind of say there's fraud. Now, a lot of other traders, a lot of other furrows, a lot of people on TV, analysts, they don't want to say this, but basically, not only was the market a bubble, the retail apes kind of, participate in fraud. I hate to say it. I'm not going to say it because it hasn't been proven yet, but Keith Gill, the Roaring Kitty, he's not in jail, but if he was in jail, come on, he knows what he does. He knows what he did. When you go into a stock, all right, and it doesn't have good financials, but you're an influencer, and you can tell a whole bunch of people to go into the stock, and everyone goes into the stock at the same time. This is an auction. What that does is it drives up the stock price. When it drives up the stock price, and this is what I'm going to discuss now, but this is what I do. So in 2012, I got a W-2. I'm going to get into that, why I'm going over that. So 2012, I got a W-2. Personal reasons, I started working, but in 2020, when the whole market was going through the roof, 2021, when the market went through the roof, I was working full time. And when the most money was made, when things are low and then they go through the roof, I didn't have a chance like that. In 2009, it didn't fly. 2010, when the market came back, it didn't come back like that. When the NASDAQ crashed in the year 2000, it crashed from 5,000 to 1,000. 5,000 to 1,000. It took 15 years to get back to 5,000. 15 years. That's not no fun. Look it up. 15 years. So even in 2009, 2010, 2011, we had a bull rally, it's a bull market, but nothing like 2020 and 2020. The last time we saw 2020, 2021 was the 90s. You had the NASDAQ drop to 6,000 and went up to 16,000 in less than a year. So that was the time to make the most money. And the reason why I'm saying that is in 2017, I lost on Tesla puts close to $25,000. You know what? I'm not going to take the blame for that because Elon Musk, the magician, he's a good salesman. He does not execute. Do not tell me he executes. He misses numbers. He misses delivery dates. He misses things all the time. But he tells traders what they want to hear. So when he tells traders what they want to hear, boom, the stock goes up and I lost my puts. But I was so mad, I stopped trading options in 2017 and I was working full time. Full time in 2020, 2020 when everything went through the roof. But in 2021, we see what happened with AMC, GameStop in the beginning of the year. And towards July is the first time I threw a grenade since the 90s. I'm not saying I didn't trade stocks between 2000 and 2020. Questionable companies. A questionable company is a company that's a runner. Something like Coupang, CPNG, that was losing money but had the right trajectory. So I have another video on terminology. So something that's a runner is not making money now, has very good growth, and within the 18 months, I can see earnings. One that we were trading a ton, and we like is HIMS. The growth is near 100%. There, within the next 2 to 3 quarters, it's going to break even. And when it breaks even, if it's still growing at 100%, it's going to grow out. And that thing is going to fly as long as it's a bull market. If it's a bull market. I'm not going to say it's definitely going to bull market because we want to see quarter to quarter what's going on with the market. And we want to make sure HIMS executes. The good thing about HIMS, if you take a look at the last 3-4 quarters, they've been on that trajectory. They've been losing less money and growing steady, 70%, 80%. This report, they grew 95%. So if they're growing steady, 75, 80, 90, and now almost 100%, and the amount of losses is decreasing, the trajectory is right. That's a runner. So the reason why I'm saying that is I have been trading runners, but I have not traded grenade until the summer of 2021. I have not traded grenade since the 90s. A grenade is the company that I knowingly know it's going to fail. It's a trash company. Companies like, I'm going to just name 5. ATER, ATER, CEI, DATS, TMC, even BBBY. I'm trading BBBY also. The past couple of months I was getting puts, but last July, it was all taken off. So grenades is something I only know. So the only reason I did that is I see all the apes making tons of money. And I'm going to get into that very, very shortly with options. And that's why I was explaining the Tesla. So I see all the apes doing that. I see people on my team throwing grenades and making a lot of money. So I changed strategy too and decided to throw one grenade at a time. One grenade at a time. Most of the time I was doing lettuce hands, meaning I was trading in and out within a minute or two, sometimes 30, 40 seconds. I was buying it, selling it, 30, 40 seconds, buying and selling. When DWAC first went, DWAC went from 10 to 175 in 3 days. No FUD. That is part of the reason why I knew that we were near a peak. Take a look at it. It was late October. When that happened, I was like, you know what? I'm gonna take a little step back because something's got to give. That is not normal. But in July 1st is when I decided to start throwing some grenades. Then when I saw the bad signs in October, I decided to lay off grenades, and I saw all the money being made with options. Now, a reason why it wasn't a big deal and why I didn't want to do options is I'm working full time. I retired last Thanksgiving. Unfortunately, that's almost this time last year. Unfortunately, when I retired last Thanksgiving, I was thinking, maybe we'll still have 3 months, 6 months of a good market, like a bull run. I didn't know that we were peaking in October. I saw bad signs, but I didn't know we were peaking in October. So I retired, hoping to make even more money. And, that's why I retired. But in October, I decided to come back in options. Because even though you make a ton of money on stocks, real money is made in options. Real money is made in options. Now, I started trading options even in the late 90s. And I was doing margin. Not good. I don't recommend it. I had up to 5 times buying power. That means if I had $10,000, I could buy $50,000 worth of stocks. I didn't do 50,000, but I was constantly doing 30, like 3 times buying power of what I had. I was constantly doing that. I was doing options. I wasn't doing a lot of options. Options weren't as active as they are now. I just did a post on Friday talking about how many options were expiring, $2 trillion, and 46 million options are traded a trading day in November of 2022. If you go to the 90s, 46 million. In the 90s, I don't even think it was a million. I'm not sure. I don't even want to say. I don't know. But I can tell you, in 2017, when I was last trading options, before I jumped back in, options were 5 to 10 million. 5 to 10 million a day. And now we're getting as high as 60 million. Six times. What does that mean? People are gambling. If they're gambling, the options are moving quickly. Almost quicker than the stock. And the real money is made through options. Now, there's a reason why I just talked about people's hero, Keith Gill. Keith Gill, I hate to say it. I don't want to say bad things on YouTube, so I'm not. I'm going to say that Keith Gill is not too bright. Not too bright. He saw Tesla as meme number 1 and looked for the next stock that's close to 100% short. And I kept making videos, and he had the Wall Street bets that had millions of people that were already pumping Tesla, and now they moved on to GameStop. GameStop ran. Now, this is why a lot of people made a whole ton of money with almost nothing. And unfortunately, all traders, pretty much all retail, keep going to that. Keeps going to that. You cannot go to that because this is not 2020 with Tesla. Nvidia also, some other stocks, SE, some other stocks. This is not 2021 with AMC and GameStop, BlackBerry, BBBY, even KOSS. This is not 2021. So this is what they did. The way you make a ton of money. So trust me, I do not want to cause FOMO. FOMO is the last thing I want to create. But sometimes people are telling me, Nathan, you're a safe trader. What are you doing? How come you're not trading this, not trading that? Trust me, I know how to make 2,000-3,000% in a single day. And I'm going to tell you how you could have made 3,000% yesterday on Friday, 3,000%. But that's with a high risk. I know how to make a ton of money every single day, but I don't want to take the risk, and I don't recommend anyone taking the risk, because when I go into a trade, and I've written about this, I go into trades feeling 90% probable that I'm going to win. Can't be 100%, but 90% probable that I'm going to win. Now, I'm not greedy. I might even start taking 10%. I'm going to go into that video 3. I might even start taking 10% on my options. I was taking 20 to 25%. I was being a little greedy, and that's what I'm going to talk about in video 3. But I might start taking 10%. I might start taking 10%. We're going to see. That's video, like I said, that's video 3. But the way these people were making a ton of money, they saw all the apes, all the retail pushing Bed Bath & Beyond, GameStop, AMC. And the way that you make the most money is buying out of the money calls with a short time frame. That is called a lotto. That is called a lotto. Anytime you have something that's going to strike, let's say, within 7 days. I'm going to call it within 7 days. Because buying something on the day of is really, really bad. I don't say, you know what, that's a thing that's 3,000% I'm going to go over. But this is how they made a lot of money. This is how people with $30,000 made it to $1 million. And I wasn't able to do that because I was so mad at Tesla puts years ago. I decided not to do any options. The only reason I decided to go back in options is because all the missed opportunity. I'm seeing apes make tons of money. I did great. I made 300%. But I'm seeing people make thousands of percent, making from 10,000 to 100,000 or 300,000 with nothing. And this is why. When I see it happening, and these people don't even know what's going on. That's the funny thing. They don't even know what's going on. I'm seeing it happen. I'm seeing the gamma squeeze. I know the gamma squeeze. I know when the gamma squeeze is hitting. You could see the in the money options. You can see the orders executing on the volume. If you take a look at in the money, then you take a look at volume, you can see it executing. I could actually see a gamma squeeze while it's happening. Anyway, that's what I'm saying. So these people don't even see it. They're making tons of money. I'm seeing it and not participating. So in October, I decided to go back in options. And then boom, the whole market has been falling since October. But let's go back to the way they were making tons of money. They were buying out of the money calls on stuff like GameStop, AMC. They were putting like bets of $1,000 and turning $1,000 into $10,000. How do you do that? How do you do that, right? So let's say AMC stock is $20, right? $20. You're buying a call on Monday that expires on Friday. It's $20. What are the chances of it going from 20 to 25? Not high, right? It's due in 5 days. But you have a whole bunch of apes. You got millions of apes. Every single post is AMC or GameStop. Pencil in your meme. Every single post is that. So you buy it on a Monday. You buy a call that's due on Friday for 25. Because it's $5 away and only 5 days left. You buy the call for, let's say on Monday, 50 cents. Because what are the chances? It goes from 20 to 25 in 5 days. Very, very small, right? So you buy it at 50 cents, right? You put $1,000. Let's just use $1,000. It's easy. It's easy, right? So if it's 50 cents, you're putting $1,000 in. That means you're buying 20 calls. 20 calls at 50 cents. On Friday, it hits $30 because it just memed. It just memed. Your calls that you bought for 50 cents are now worth $9. $9 from 50 cents. So that's almost 18 times. 17, 18 times. So if you would have put in $1,000 on Monday, Friday you have $18,000. And people on Wall Street Bets were posting this. So when people on Wall Street Bets are posting this, it's causing FOMO. It's causing FOMO. So and I see a lot of retail trying to say, No, everything is cool with that. Everything is gravy with that. No, man, I've been trading since the '90s. That is not kosher. That's not kosher. If you want to participate, participate. You know, I didn't participate. I regret it a little bit. I feel like me. I know what's happening, so it would be a little wrong for me to do it. I didn't do it though because I wasn't in options until October. You know, unfortunately, but that's what happened, and unfortunately, like I'm not gonna say it's manipulation. Let's say manipulation because I don't want to say horrible things. But to me, sorry, Keith Gill should be in prison. He should be in prison. You know, it's not proven or nothing, but I just told you what's going on. And if you go on social media and you have a effect of millions, and then you post these options, turning $1,000 into 20,000, and you do it again with 10,000 to 100,000, you do it again with 100,000, 500,000. See, a lot of apes don't know what's going on, but I do. I've been in this business so long. I do. I'm seeing it. I'm seeing what's happening and how. I didn't participate because I was so mad because of Tesla, because of Elon Musk. I came back into options in October, figured I was going to probably retire from work, spend more time on options because I was working full time. So I can't trade on my phones. I have two phones, trade on my phones, watch stocks, watch options too. So that's what I didn't do. So Nathan, Ultimate Trader, does know how to make a ton of money, but you know, the risk, you got to weigh the risk, but I know how to make a ton of money. And the reason why I'm talking about all that, and lately, the last 2 weeks, the market's been rallying on bad news, but that's proof. That is proof to me that the apes are still coming. So next time we have data that's good and the market rocks, who can read the gamma squeeze? Who can see the gamma squeeze? Guess who's going to be in there? Right now, I'm being super careful with puts. I'm not trading in stocks. I'm going to do that in video 3. But be happy with 25 to 50%. Okay? We don't know what the market's going to be. If we're going to have like a Super Bowl run, that's when you go after it. You go after it. So this video, I'm discussing trading strategies. But when the market's bad, take the 25%, even the 10%. Over time, you do that, you're gonna make a ton of money. Don't try to turn $10,000 into 100,000. Actually, I don't want to say don't. You do you. But I just described how we can make a ton of money, how I was able to see it. Unfortunately, I didn't do anything because I was mad at Tesla and mad at Elon Musk. I still am. You know, to me, the guy owes me a lot of money, but that's a whole thing altogether. And now I'm gonna give you a real example of yesterday. Okay, and unfortunately for me, I had Saba puts. I think I bought Saba puts in September. I paid, I think, $3.60 for Saba puts. The next day, and when I bought the Saba puts, it was a 30 strike, but the stock was flying to like 47 or 48. I bought them, about 47 or 48. The next day, after I bought the puts, saying it was going to be 30 strike, by November 18th, which expired yesterday, it went down to 38. It was down almost $10 in a single day. My puts that I bought for like 360 were worth 650. I bought them at 360 and I didn't take it. I was trying to get $7, 100% the next day. I want to say it was, it was being greedy. Now that I took some of the loss, I'm going to get into that. But the stock was down. The next day, it gapped down like $8 or $9. So I tried to get $7. In the morning, near the open, it was $6.50. Then it was hitting $5.75. I lowered my sell price from $7 to $6.50, I think to $6 to to 550 to 5, but I didn't want to take less than 5. I ended up taking the loss yesterday. But the reason why I'm going to that is yesterday, Sava opened at 36, right? It opened at $36. The puts, November 18th, 30 strike, opened yesterday at 3 cents. 3 cents. No FUD here. None. Take a look. It opened at 3 cents. It traded a ton. Those 11-18, November 18th, 30 strike traded a ton. Around 2 p.m. Not even 2. At 1:30 p.m. I read the news that Sava needs cash. They printed 1.6 million shares of Sava to get $50 million at 30 stock price. At 30 stock price. I had the puts. They opened at 3 cents. Unfortunately for me, I didn't cover. And I was up so many times. So many times. And that's why I'm going to go into video 3. I was up so many times. But you remember I said those Sava puts were 3 cents? They opened. Yesterday's high was almost $1. Almost $1. I took the loss. I bought it at, I think, 360. I took the loss at 75 cents because the news came out around 1:30 that Sava's printing shares because they need cash, and that's why you don't play with companies that need cash that are bleeding. It dropped so fast when it dropped to like $30.50, $30.75. I took the loss. I sold it at 75 cents. I lost a little bit more than $1,000. I lost like 75% on the option. I was scared because what the hell? You know, it expired yesterday. At 4 p.m. it expired. And this was around 1:30, 2 o'clock. I was like, you know what? Let me take my loss and move on. Another 5 minutes later, it dips to $29.50. Remember, they print the shares at $30, so it should go below 30, and that's what video 3 I'll talk about that. So it should go below 30. It went to $29.50. Those puts went up to close to $1. I think like 97, 98 cents. Maybe even 99, but it was close to $1. But the whole point is, in the morning when it opened, it was 3 cents. It was 3 cents and went up to almost $1. Almost $1. That's 33 times. So you could have literally, but who would have known? If you would have known Sava's printing shares at $30, if you could have got that information somehow and you would have bought the 30 strike for 3 cents, you could have literally put $1,000 and end of the day 33 G's, or $10,000 and be 330,000 with 10,000. Not no FUD. And it traded, volume was massive. So someone knew something. But the whole video with this is Nathan knows how to make money, but Nathan's not taking the risk. If you're taking the risk, go ahead. When the market is very, very bullish and flies, I will be there buying calls. I'm going to buy shares and calls. I'm going to do both. And I'm going to be ready. And I'm going to read the data quicker than pretty much everyone. Trust me, I've been there. But we want to talk strategy because the past week I'm reading on Twitter, a little bit on Reddit. There's too much FUD. People are doing FOMO. Sound fraud is causing massive losses. And this is what you want to avoid, those massive losses. Got to be careful of all that fraud. Okay? And this is a very long video. It's important. I don't like to influence or tell people how to trade. You make your decisions. But take a look at what I have to say. And then maybe, learn a little something. Absorb it. Maybe institute some of it in your trading strategies, because it's good to take ideas from a lot of people, come out with what you're comfortable with. But I explained to you how people made a ton of money, how you could have made a ton of money on Friday. It's not something I recommend, and good luck.